All right, welcome back everyone to the Deduction Desk. Sagar, Joe, today we're going to be speaking about foreign tax filings for individuals, right? So when does owning money outside the US actually become an IRS tax problem for you, right? I think that's important for a lot of our clients who have investments outside, whether it's property, whether it's bank accounts, whether it's business entities or business percentages that they own, and how is that really going to incorporate into what we pay in taxes here?
Yeah, I think it was like in 2012, there was some sort of like scam or big news story that had to do with a bunch of hedge fund guys that were setting up companies in foreign countries and then saying that they were paying the foreign countries for services, taking the expense here in the US, sending it to a shell company in like Venezuela or the Cayman Islands that doesn't have reporting requirements, and then from there taking the excess profit. So basically it's like, hey, I charged myself $1 million for consulting, right? And the company that I paid is in a foreign country that doesn't have U.S. filing obligations. Okay. And now that company has $1 million. I take the expense. That company is in, a non-taxable jurisdiction. Right. So there's no tax consequences there. The $1 million that's sitting in that company is ultimately going to a bank account that I'm setting up in that foreign country and avoiding the taxes completely. And I just have $1 million sitting in a bank account of mine in a foreign country.
It's funny. My brother's wife, who actually works with us, Molly's father lives in Thailand, has money that is in Thailand bank account, and there was capital gains from when he sold in the past. And I tried to look up as much information about moving money back here so that he could invest. And a lot of what I found was that you're not going to have to pay capital gains. So I was like, this is the biggest loophole, other than the fact that you would actually have to live in Thailand in order to get a benefit from that.
Yeah, I mean, and so that is kind of where like people have been doing this probably for 100 years. Yeah. But it wasn't until then that they decided to start closing this loophole. Okay. So now, in order to close the loophole, what they've done is pass a law that is basically targeting the normal working person more than these hedge
the people
fund
that are actually doing it.
Because they've already figured out how to get out of it.
Right.
They're just putting it directly in the name of some random person who doesn't have the same U.S. filing threshold or whatever, right?
Interesting.
So who is actually fallen into the trap of this foreign reporting? Yeah. It's typically people who are here on a green card or a visa, and they're waiting for their status to be approved. Okay. And in the meantime, they didn't even realize they had to file a bank account that makes no money in a foreign country, or a life insurance account, or a stock trading account that they didn't remember, right? Also, people who inherit money from foreign individuals, like maybe your grandma lives in Italy and she put $50K or $10K away into a separate bank account for you after she passed. Right. That would actually be a reportable requirement. And these people are actually the ones that are getting hit with a lot of these hefty fines and penalties, or are subject to them. Okay. In reality, this is also partially, I think, like a catch-all for someone doing shady stuff. Okay. Right? You're buying crypto, moving it to Portugal, selling it in Portugal because there's no capital gains tax. No, and then putting it into a bank account in Portugal, hoping that the government doesn't notice that you are showing you make $10,000 a year in the US, but you got like $5 million sitting in cash in a foreign country. Okay. And so, look, I think you should regulate things like this. Right? Especially when you see the abuse that happens sometimes, where people will show the poor on their tax returns, but they have millions in assets somewhere else, and they're claiming all kinds of benefits here, right? As if somebody making 10 grand. So I think there's some thought behind that, where you need to like, hey, if these benefits are there for people that qualify and you have this much money, you don't qualify. So how do you figure this stuff out? And regardless of what our opinions are on it, this is what the law is. So
this is that conversation that all of us have thought about in the past. Like, oh, he has offshore bank accounts, right? Bank accounts that are not in the United States. Yeah. What is the background behind that, right? Like, what are the benefits from that? When do you have to actually buy?
When they're taking that boat
to
smuggle the cash.
Yeah, that's right.
Now, theoretically, would the person doing this illegal action not do it because they have more reporting requirements? Maybe, maybe not.
Right.
But now there are actual reporting requirements. So if they catch you with these foreign bank accounts, there are steep fines.
Right.
It's up to 50% of what's in that account, or $100,000 per year and per account that you hadn't been filing.
All right, so let's start with the filing, right? So an FBAR is where you start?
Yeah, so an FBAR is if you have less than $10,000 combined aggregate in all those accounts, you're required to file this FBAR, right?
Okay.
So it's a Form 114.
Okay.
If you're in that, that category where you have a little bit here or there, maybe you went to Japan one time and you opened up a savings account or whatever random thing you did. If it's under 10,000, you don't have to file it.
Got it. Okay.
If you're over 10 grand,
you have to file it.
Got it. For each account, you have to put down some information, the amount of money that's in there, the name of the bank.
And this is aggregate. So let's say you have a bank account in Japan, you have a bank account in Thailand, and there's 5,000 and 6,000 in one or the other.
Then you qualify as having more than 10,000.
So you'd have to do both accounts, even though they're in two different states.
Correct.
They're both over 10,000.
Okay. Individually less than 10.
Got it.
So it's not a very difficult form. It's maybe 2 pages long.
Yeah.
And it's just declaring some basic stuff.
Well, listen, if you have nothing to hide, I'm sure it's easy. But when you're trying to hide something, it's just a little bit more difficult.
More importantly, it's also you have to report now the cash, the interest that you're earning, the dividends that you're earning if you're owning stocks. Those are the things that are taxable.
Okay.
Reporting that you have 10 grand or 50 grand or $10 million in a foreign account is not taxable. Okay. There's no tax you pay on it. But if you're claiming you have $10 million in a bank account, there's probably some interest being earned.
Right.
So you would be expected to pay the tax on the interest that you're earning.
Even in another country.
Even in the other country.
Got it.
We can get into the foreign tax credits so that you're not double taxed. If you're paying tax in another country and it has a tax treaty with the U.S., which most countries do, then you also avoid the double tax.
Got it. Okay.
So like I said, those actual fines are pretty expensive, right? So if you don't file your FinCEN, your FBAR, you're looking at a $10,000 penalty.
Right.
Okay, that's just right off the bat, $10,000 penalty per account per year. Okay. And that's if they say you were willfully, that's if you're not willfully doing it. If you're willfully doing it, it's up to 50% of the value of the account.
So they'd have to prove that you didn't realize what you were doing compared to I knew what I was doing.
Yeah.
It's a much bigger fine.
Exactly.
Yeah. Which, I mean, nowadays, especially with the size of that fine, I'm sure it wouldn't be difficult to figure out.
Yeah.
Right? Emails, tax, how hard could it be?
Correct. Then there's the bigger threshold.
Okay.
That first form doesn't go to the IRS. It goes to the Border Control.
Okay,
right?
got it.
The second form is the 8938. Okay. That's your FATCA. That's to report if you have more than 50,000 as a single person or 100,000 in foreign assets as a, as a married filing joint person.
Okay.
So where do these things come about from? Like those situations I gave before, you move to America later in life, maybe you have family that lives overseas, or a lot of people that we see, you're an expat. Right. You got a job working, maybe you're in the military, maybe you were, a contractor.
Right.
You got sent out to China for a year.
Yeah, which happens a lot.
And while you're out there, you open a bank account, right? So maybe getting to 50,000 or 100,000 is a big number,
right?
But who knows? Maybe you're there for years and you really like it there and you want to settle down there. We have a friend who's been in Bulgaria for 10 years.
Oh, dang!
Like I don't know what he's doing out there, but hopefully he comes back soon. So he probably has bank accounts that are filling up, and I would hope he does if he. Spending 10 years in Bulgaria.
Right. So, I mean, if he's in Bulgaria and he doesn't live here anymore, but he's still a U.S. citizen, all this stuff has to be filed, even if he lives in Bulgaria.
You still have to file in the U.S.
Right.
If you're making W-2 income out there, you have to file in the U.S. and you have to pay tax on it.
W-2 income from the U.S.
Oh,
so he has a job in the U.S.
Yeah.
Lives in Bulgaria, but is getting W-2 income from this American job.
Yeah.
Okay. And if he lived in Bulgaria, didn't live here anymore,
he would still have to file.
To file it. Oh,
as a U.S., if you went to the moon,
right,
and you started a company up there, you'd still have to file in the U.S.
That's the moon cat.
Yeah. Anywhere you live,
right,
you are responsible for filing taxes in the U.S. as well. Now, they're not going to double tax you. You'll get credits.
Right.
If you are somewhere in Europe where the tax rates are higher than they are in the U.S., you probably won't pay taxes here. But if you're somewhere where there's a 0% tax rate, you didn't just escape the taxes.
Right.
There's other rules to this. There's limits on how much. Like if you make under a certain amount, you don't you're not qualified for this.
Yeah.
So things to keep in mind.
Right. Or else Shohei Ohtani would live in Japan and not live here and just make money without paying the taxes on it.
Exactly. Or every billionaire would say they live
in another country.
On a yacht in international waters.
Yeah.
And so, if you're a citizen of that country, you owe taxes in that country no matter where you live.
Got it.
And the opposite works too, which we'll get into when we talk about the business stuff.
Okay.
Now, outside of that, when should you talk to a professional? Right? The first situation is you're listening to us talk about this and you're like pale as a ghost because you're like, oh my God,
talk to somebody.
I haven't been filing anything and I have these things. There's a lot of ways to get around this. The first one is doing a streamlined method where you tell the IRS, hey, listen, I screwed up. I didn't realize I had to file this. You make an arbitrary payment as a it's
show a good
10%
faith
of the value of the accounts. And you say, hey, I should have been filing these all these years. I messed up. Here's my filing.
Right.
Okay. The other option is, listen, if you've been paying, as long as you've been paying the taxes on the income you've been earning and you're showing that, you're probably making a good case for yourself to put yourself at the mercy of the IRS and say, hey, I fell into a trap. I didn't realize that this was something I had to do.
Right.
No one told me. I'm getting ahead of it. And that will usually also help and be in your favor. As long as you've been paying the taxes on the income. If you've been hiding the taxes on the income and hiding the money, willfully or not, you need to get in front of it. And that's the first person that should be talking to somebody about this, right? The second thing is if you are planning on getting investment, if you're planning on getting income from a family member, if you and your family are thinking about maybe one day moving to another country, these are things that you should be talking to an accountant about before. You can say, we have clients that have told us, oh, I want to go to XYZ random country because they have low taxes and they let me sell my crypto without having to pay capital gain. It's that sounds great. But that doesn't mean that you've lost. If you're an American citizen, you have to rescind your citizenship. You may have to pay an exit tax.
Right.
There are other things you need to do before you can just go move somewhere and avoid your taxes.
Right. And this includes foreign accounts, stocks held directly, foreign stocks that are held directly, interest in foreign entities, foreign trust, anything to do with those topics in particular.
As long as it's coming back down to you initially as the beneficial owner. You can put a trust if you're the beneficiary.
It doesn't make a
It's
difference.
still you.
Right.
You can have it in your mom's name, but if it's a related party, there's probably still some reporting requirements.
Yeah. Or your mom's going to get slammed.
Yeah. Pause.
Your mom's like, I have $20,000 tax bill. Maybe slam was the wrong word. But,
so then the other side of it is, then this is the one that everybody falls into a trap with. And it's kind of egregious and overreaching, but it's not from the US side, it's from the other side. This is from the business standpoint. Imagine you're, like many people, and you have a virtual assistant, or you have somebody who's assisting, or somebody who's doing some consulting for you, or a back office that you're using in the Philippines or India, right? Any of those criteria could potentially require you to file not only US filing, but also tax returns in those foreign countries that you're operating your business out of.
So if we're getting income from those places.
Even if you're sending expenses to those places, you may have tax filing requirements in those particular countries. Now, that's a country by country thing. You have to check to see what country you're working with and whether or not they have these requirements.
So if we're paying someone in the Philippines to, let's say, I don't know, edit our videos. So we would have to do tax filings with that country if they require it.
Yeah, if they require it, which Philippines doesn't.
Doesn't.
Yeah.
You're safe.
So you're safe, Zach. Oh, hell no, man. What the But on the opposite side, let's say we, become big in a foreign country.
Right.
And now a bunch of guys in Singapore want to buy Deduction Desk merch.
Yeah.
Right. And
Which
we
is
go
coming.
and ship a bunch of stuff out there to go sell.
Right.
Or we go do a show out
in
there.
Singapore. That would be cool.
Now you have.
we have 110 followers, so I doubt that's going to happen. But maybe we'll sell desks and we'll have a version of our desk that we use, this little corner piece.
Exactly. Live show.
But that'd be interesting. Okay, so if we do that, then obviously that would be income that we're going to have to report because we earned it in Singapore.
Similarly, if you are an active investor, or and that somebody asks you to buy some shares in some company that's that they're starting
Right.
as a foreign company. You may have filing requirements if you own more than 10%.
Right.
If a group of Americans band together with you and buy 50% of this company, even if you guys are all completely unrelated, you may have personally tax filing requirements.
Right.
So anytime you do something offshore,
Yep.
as a US citizen, you should be talking to your accountant and you should be talking to a lawyer to make sure that you aren't stepping into a bunch of filing requirements that you didn't even know about for like a $5,000 payment that you make to your cousin to go open a barbershop, right? Now all of a sudden you may be on the hook for $50,000 to $100,000 in penalties.
Right. Yeah. So it's important.
Yeah. So, I mean, listen, outside of that, I think...
Yeah, how deep into the weeds we want to go. But
there's no point in sitting here explaining FBARs to you, 1042,
right.
Form Fs. Like going into that depth is not necessary for this video. But I think the messaging that we want to get across is you need to talk to a professional if you start messing with anything foreign, right? Even if you're using a foreign supplier to ship items to you. You have tariff requirements now. Right? And you have foreign filings you have to do in those countries to show the tariff filings, right? So there's tons and tons of things outside of as simple as, hey, I'm now outsourcing to this foreign country to cut costs.
Right.
It's not as simple as that. And it's not as easy as it sounds. So
yeah, I mean, look, our last video was based on how do you start a business. You may decide that there's opportunity to, reduce some of those expenses by outsourcing to another country. Immediately when that is part of your thought process, you have a conversation with your accountant, you have a conversation with an attorney, see what the responsibilities are going to be, how much it's going to cost to make sure we do that correctly, and then, take it from there. But I think, for the purposes of this video, I mean, the main part of that is that what are some of the filings that we need and how do we make sure that we do that correctly? So, I mean, is other stuff that you want to...
Yeah, I would say, listen, if your investors are coming foreign to the US, you're generally safe.
Okay.
It's when it goes the other way.
Right.
And you're sending money out.
That's
when you have to be conscientious more of making sure you're reporting everything.
Yeah.
If you're bringing money in, typically you're okay.
Yeah. Okay. So we're bringing money in from other countries or we're doing business in the United States. More than likely, we're okay. We're sending money out to other countries or we're doing any type of foreign bank accounts, foreign trusts, foreign entities that we're part of. We're buying stock directly in foreign countries. That's where you want to make sure
Notice we haven't mentioned buying a foreign property, though.
Oh, that's interesting.
Technically, you don't need to report that.
But if I'm buying a foreign property, let's say I buy a house in Italy, don't I have to send money to an Italian bank account in order to buy it?
Yeah.
So then that would require
unless you send it directly to your lawyer.
Okay.
And,
and
they're escrowing the funds.
Okay. And then you wouldn't have to. But if you set up a bank account, it's over 10,000. FBAR immediately you start setting it up.
Mm-hmm.
So it's good. So, hopefully we're able to walk away with some, talking points or notes for you, especially for some of us who are working with individuals outside of the country or sending expenses out that way. Make sure you're conscious of that. Talk to a professional and let's get those Singapore numbers up.
Yeah, let's go Singapore.
Have a live video there. Thanks, guys. Appreciate it. We'll see you in the next video.
Take care.
What's the culture there? Is it...
Singapore's a country.
No, I know.